What's happening, Auxly traders and investors? This is Rod with Power Group. Welcome back on the Pursuit of Wealth. Today is Monday, May 16th. Hope you're well and hope you had a great weekend. Happy Monday. In this short video, going to be discussing the stock Auxly, ticker symbol XLY. They reported Q1 earnings this morning. Before the bell, they just came out and they were less than awesome. They missed on their revenue and EPS, earnings per share estimates, which I'll bring up here in just a moment. Also going to do some technical analysis, and I'll give my thoughts and opinions on the stock in the weeks and months ahead and what we can potentially expect today. Before we get to it though, make sure to smash the like and subscribe to the channel. It doesn't cost you anything. If you're new here, you can also tick the bell and you'll be notified on any future updates. Taking a look at the earnings report, so Auxly Q1 revenue declines 23% sequentially to 22.6 million Canadian. Ouch, 23% sequentially. And if we take a look at the estimates here, you can see they were forecasting 29.13 million, analysts forecasting. And then analysts were also forecasting negative 0.015 for EPS. And if you take the amount of loss and divide it by the shares, you'll scroll down here and you can see they got negative 0.05 for EPS. So it just means it's negative when it's in those brackets. But again, pretty big miss on EPS and a pretty big miss on revenue. Wouldn't be surprised if we pulled back quite a bit today. To start the day, we have been showing some strength leading up to these earnings. So if the fact that they were less than awesome and they missed on both EPS and revenue, wouldn't be surprised if we pulled back, between 5-10%, maybe more today. But again, going to take a look at the chart here in a moment and what to expect in terms of support and resistance. But taking a look at the Q1 22 highlights real quick. Again, you can check out this full article in its entirety if you want to read the whole thing. I'm not going to go through it just in effort of time, but we'll go through the highlights here. So 147% increase in net sales compared to Q1 in 2022. SG&A of 12.8 million in Q1 2022 decreased slightly quarter over quarter with the full quarter consolidation of Auxly Leamington. They had adjusted EBITDA improved year over year by approximately 14%, so that's great to see. Continue to hold number one position in MJ 2.0 sales nationally, and that's not surprising. They have great 2.0 products. Let me know in the comments below what your favorite 2.0 product is. Back 40, another great product, remains the number one vape brand in the country and became the number 4 flower brand nationally in the quarter. Maintained its position as one of the top 5 LPs in Canada, and total MJ sales was 6.9% market share. Actually, I got some market share numbers that I'll show you, and they actually fell out of the top 5. So this could be another reason why they're sliding here, with some other LPs gaining market share. Organigram being one of them. With growing competition in vapes, the largest 2.0 product category, Auxly continued to hold the number 1 LP position in the national sales with 20% market share. And we know Quebec still has yet to allow vapes, so that's another completely untapped market. Once they finally allow vapes, they just finally allowed edibles, which is going to be huge. We know Tilray launched the first edible in Quebec, so likely won't be long before Auxly taps that market as well. So that'll be another huge revenue stream for these LPs and Auxly specifically. Successfully launched 10 new SKUs into the market in the quarter, including solventless live rosin vapes, new infused pre-roll strains, and the first to market live rosin chew, all under Collab Project brand. Recorded non-cash impairment of approximately 25.7 million related to the closure of Auxly Annapolis and Auxly Annapolis OG cultivation facilities. So again, missed on both our estimates. We do have SNDL coming out with earnings after the bell as well, so we'll see if that can help boost the sector. But again, I did a post a few days ago, and 3 days ago, and you can see here this is High Fire data. They're very reputable, and this is David George Koch from BNN Bloomberg, also reputable, saying that these numbers are for April. So if we take a look at Auxly, it actually fell. It was in the top 5, and you can see now it's actually falling out of the top 5. And came in at 20.1 million for the month of April, whereas Village Farms, Canopy, Organigram, Tilray, and Hexo led the way. So again, we could see a little bit more loss of market share for Auxly. We have to be realistic and have to come to terms with that fact based on April sales data. And this is the competitive landscape of the market that we're in. Unfortunately, probably going to be a lot of bouncing back and forth in terms of these LPs. We've got close to 800 licensed producers, and in my opinion, a lot of the smaller companies, they're just going to go. They're going to fade away, or they're going to get bought out. But there's just too many licensed producers and competition in the market. Diving into the chart, though, we did reject at EMA 26, that white line here on the weekly time frame, and that's sitting at 17.5 cents. That's going to be resistance number 1, and then we've got the major resistance there at 19.5 cents. You can see here we haven't been able to get over 19.5 cents now since December of last year. So if we manage to get over first resistance at 17.5, watch key resistance there at 19.5 cents. If we get over 19.5 cents, we don't have any weekly resistance all the way up until about 35 cents. So again, if we can get over that 20 cent mark, likely heading up to that 30 to 35 area. But like I said, no weekly resistance until 35 cents. So expect a pretty big move and a hard and fast move if we get over that 19.5 cent resistance. Key support, though, going to be at 13.5 cents. And we did have monthly inside bars that are starting to break bullish. We had multiple inside bars on the monthly time frame. We broke bearish, ended up being a bit of a bear trap, and here we are breaking bullish. But it could end up being a bull trap with these earnings missing estimates, and likely going to negatively impact the stock here, especially how much we ran into those earnings. You can see here from the low there, we were up about 30%. So I wouldn't be surprised if we pulled back 5 to 10% once the bell rings. Taking a look at the weekly time frame, though, we did close above the 10-week moving average at 15 cents. That is great to see. And we have a bull cross of the stochastic and the MACD on the macro level. This is great to see. And in my opinion, over the next couple weeks and months, we could see this stock absolutely fly and erupt to the upside. We also have the 50 weekly moving average there at 21 cents to be watching. And again, lots of room here. If we can get over that 19.5 cents, after that, we've got the 100 weekly at 25 cents. Also, taking a look at the daily time frame, we are still a long ways away before we could see a golden cross, which is the 50-day crossing through the 200-day. But we'll want to consistently close over that 200-day moving average. You can see here, the 50-day moving average. You can see here we closed above it last week at 17 cents, and also the 100 moving average. And going to be watching 20 cents is the 200-day moving average as well. So like I said, if we can get over 19.5, 20 cents, expect a hard and fast move up to around that 30 cent area. And going to be watching for a whole reversal in the sector, right? We know the whole sector is bearish at the moment, and nothing's really going to change until we see a macro level reversal in the space. And what I think is going to take is something like a sector-wide catalyst that's going to ignite this sector, right? Something like safe banking, which experts are saying now has a 60 to 70% chance of getting passed this year due to some safety concerns and robberies and things like that. Going to end it there, though. Let me know in the comments below what your biggest takeaway from these earnings. Like I said, pretty lackluster, missed on both estimates, and pretty big decline in sales there sequentially. And also April not looking too hot either, dropping out of the top 5. I think we could see a bit more downside and a bit more hurt in their financials in the next coming quarters based on that, at least in the next quarter. But again, this is just it's a juggling act, right? We have companies clawing back market share, and then the next month, some other companies claw it back. It's just going to be, the lay of the land here for the next little while until we start to see these companies, the winners really rise to the top, and then we start to see some of the smaller companies fade away. So let's continue the conversation in the comments below. Always love hearing from you. Going to end it there, though. If you could smash the like, doesn't cost you anything, helps support me in the channel. If you're new, subscribe, and you can tick the bell. You'll be notified on any future updates. Thanks so much, and we'll see you in the next video.